Amazon stock is having a phenomenal year, and the stock price at $146.75 per share is near a 52-week high. So can the stock go higher still, or has Amazon stock reached a height that's gone too far too fast? That's the question I'm going to look at in this video here, looking at Amazon's performance in terms of revenue and profitability, its prospects longer term, and then comparing that with its valuation in addition to its stock price to come to a conclusion whether or not Amazon stock price could go higher from here or if it is due for a pullback. So let's get right into some of these results here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Starting with Amazon's latest quarterly revenue and profit performance. Looking at net sales, that increased by 13% to 143 billion in the third quarter. That was compared with 127 billion in the third quarter of 2022. AWS segment sales increased by 12% to 23.1 billion. Remember, AWS is Amazon's most profitable segment, much more profitable than its North America or international segment. It generates operating profit margins close to 30%, where its e-commerce segments, which are included in North America and international, are much less profitable. So investors tend to focus on AWS sales growth more so than sales growth from the other two segments. Now, operating income in the quarter increased to $11.2 billion. That was up from 2.5 billion in the third quarter of 2022. A nearly 5x increase in operating profitability, which really got Amazon stock investors excited. Amazon has done an incredible job in 2023 controlling costs and growing into the investments they made during the pandemic. Remember, during the pandemic, Amazon experienced an absolute boom in sales. Stores, physical stores that were non-essential were closed, and people overall were hesitant to go outside of their homes into stores where they could be in close proximity with other people and potentially attract the COVID-19 virus. So people were shopping more at home, and Amazon was a strong beneficiary of that trend. Now, to meet that boom in customer demand, Amazon needed to invest billions of dollars. I think Amazon invested over $100 billion in its logistics network to be able to meet that surge in consumer demand. Things like warehouses, planes, trucks, delivery vans, and on, and employees, to make sure that it could meet that surge in demand so that customers could still get that fast shipping that they're used to with Amazon. And for the most part, Amazon delivered on that. The customer experience was strong, especially compared with everyone else, which you were seeing a lot of out of stock and delayed and canceled deliveries from so many other retailers. That wasn't the case with Amazon for the most part. When you ordered something, you got it, and for the most part, they had millions and millions of items available. So now they're recovering nicely from those overinvestments. In fact, let me show you some of the things management said about this particular fact. So Amazon management said that they're encouraged about their progress they're making to lower the cost to serve, improving the customer experience, and investing for growth. The most significant reason they've been able to achieve this is switching from a single national fulfillment network to 8 regional fulfillment networks in the US. And this made a more positive impact than management was expecting. And to make that even better, management says they're not even close to being finished in finding ways to lower costs. And so this was encouraging for Amazon stock investors that not only has management made significant progress controlling costs, but they've identified more ways and they can more ways that they can reduce costs further from here. Additionally, not only was the third quarter a spectacular quarter for Amazon stock investors, management expects the fourth quarter to be similarly strong. They're expecting net sales growth between 7 and 12%, to be between 160 billion and 167 billion in the fourth quarter, and operating income to come in at a midpoint of 9 billion in the fourth quarter. That would be more than triple the 2.7 billion in the fourth quarter of 2022. So Amazon management expecting strong profit growth again in the fourth quarter, coming on the back of that strong growth in the third quarter. So that is another reason Amazon stock investors were excited. The short term is surely shaping to be strong for Amazon, and that's not even looking at the longer term, which I'm going to talk about next. Longer term, Amazon is in an excellent position to capitalize on the growing e-commerce industry in the US. You can see here a forecast according to Statista for e-commerce sales between 2023 and 2027. You can see the forecast growing significantly from around 850 billion in 2023 all the way up close to 1.5 trillion in 2027. Shopping online is so much more convenient than shopping in person, and it's likely to fuel continued growth in the industry longer term. Amazon has the most significant market share in the e-commerce industry in the US, and it stands to capitalize from this massive growth in e-commerce sales. More specifically, according to Statista, revenue is expected to increase between 2023 and 2027 by a total of $490 billion over these next few years. Amazon has roughly, I would say, a 50% market share the last time I checked for online sales in the US. And so if you forecast Amazon out at 40 or 50% market share, its sales are going to grow by nearly 200 or 250 billion dollars over those next few years. That's phenomenal growth for Amazon, and given its demonstrated growth in economies and scale, it's likely to grow its operating profitability as well. Finally, in order to determine if I think there's more room for Amazon stock to move higher, I wanted to look at its valuation if it's already too expensive when looking at its forward price to earnings ratio. And right now, Amazon stock is trading at a forward PE of 42.67, which is about the average it's traded for according to this metric going back to January of 2022. It was above 60 for a few months early in 2022, and it was close to 30 for a few months starting 2023. At 42, it's right about the middle of its high and low according to this metric. So given all of its positive metrics near term and the positive tailwinds near term for Amazon, coupled with the excellent long-term prospects Amazon stock has, I would say yes, Amazon stock does have room to go higher from here, even though it's already at its near or above its 52-week high. So great news for Amazon stock investors to be sure, and it looks like there's more good news coming for Amazon stock investors longer term. But before I let you go, if you gained any value from this video, please subscribe to the channel. It really helps me make more videos just like this one. Thank you so much for watching.